Welcome back, session 10. FinViz using a screener to select some hot stocks that we can go ahead and figure out if we want to invest in them or not. And what I've done here is updated the spreadsheet that we worked on through the last week and a half. And the first thing we'll do is work on a quick evaluation. So right here in column K is the enterprise value, and L is the shares outstanding. And we did this in a previous episode, but we'll go ahead. I laid out some of them, and then we'll do these other ones together so you can get a feel of it. AMN was where we left off here. It's 4 billion. Type in 4 billion. And then we have shares outstanding, 38 million. Got a little carried away. Okay. 30 million, Alibaba. Hopefully you guys are doing great. Christmas is coming up. Happy holidays to you guys. 134 billion. Wow. That's impressive. 134 billion for Alibaba. Shares outstanding 2 billion. We'll call it 3 billion. Okay. Alibaba. We'll do a couple more. Polaris. Polaris is 7 billion and 56 million. $56. Okay. Last one. Perform Line Productions, PLPC. $686 million. 4 million. 686 million. 4 million. Okay, there we go. We already have this calculation, so I'll just drag it down. Boom. Okay, that's the first step. So, and we'll see where we're at. So this first number here, the D column, is market price. That's the last close of Friday's market price. So 30.72. We wrote $30 is when we did the video. That's where we have noted the price was $30, and then 20% is column E. So we need, our goal is 20%. So we need the stock to hit 36.72 if we're to invest in 30. So now we're just trying to find out the likelihood of the stock getting there. This stock is currently 2% up since we recommended it on this channel, and it offers a dividend of 0.39. And the current evaluation, doing a quick eval of the company, is $45. So everything looks good with Alliant in that regard. And the other thing we'll do is we'll do the O&P, earnings per share, and the growth of it, and that'll be today, and then we'll give it a grade of what we feel as of right now. Okay, so we'll go ahead, Alliant. And this is exactly how I do it. This is my blueprint on how I gain at least 20% a year in the stock market, and how I will personally be a stock millionaire using this exact free tools that we can take advantage of online. Okay, so I started in 2017. It was 59 cents, and sometimes 23 is listed. It's not, so we'll just have to figure it out. So we take the 59, and then this is, we'll just figure $1.20, $1.60, we'll call it. So we go 59, 160. Now we just say growth rate. This is a mini web tool, just using the growth rates. So 24 and a half. Get back to our screen. So 24.5. And then we give it a score of what the predictability and what we feel the increase is per year. So we go back 59 to $1.50. What we're looking for is just increments steadily upward. So 59, $1.15, $1.21, 96. So 96 a drop, but then it turned itself around 167. It dropped again, 113, but 25% gain per year, steadily going up for the most part. I'll probably give this like a B minus is where I see this. That's my grade for it. Not perfect, but very good. Okay, then we'll go ahead and WNS. And if you guys don't like doing this homework, I'm going to offer a service where you just can just follow me. So you can just duplicate my stock trades, and I'll just update everything, and then you can just replicate them or choose not to do them. That's the easiest form of service that I can offer. And then other than that, I can also offer like a hot list. So you don't have to do this legwork at all. You just get a list with all this work being done. Because this is literally the work I do. And if you know it's not for you, which is fine, and that's why I offer these type of services. Some people just have families or just don't find this interesting at all, which is totally fine. I totally get it. This is how my brain is hardwired. I like to do all this homework. I actually get a joy of doing it, but other people, they don't like numbers at all, and it totally makes sense. I'll just have pretty little pictures, and you just click them like you do on Microsoft Windows and call it a day. And that's the service I'll be offering in the future. WNS Holdings. Okay, let's go. So this one's already listed for us, which is nice. We don't have to go to the quarterly and try to figure it out. $75, $1.72, $2.10, $2.35, $2.06, $2.70. So we go back to 2017, 75 cents, 285, 5, 285, 40%. And look at how it increases despite that 1 year. %40 is that okay? Just want to make sure 40% there. And this one I will give like a minus for that one. Kind of do the ice hockey thing, right? Where some score can. We want to give a little leeway for that. So Dollar General is the next one. We'll go Dollar General. Dollar General's listed here, which is good. Saves us some time. 445, 564, $6, 668, 1070, 1024, 1073. So monster numbers there for Dollar General. 445, 1073. 445, 1073. Calculate 20%. And despite that 1 year again, so I'd have to give it about the same grade. Dollar General, Baidu is up next. Okay, Baidu. I'll have to figure out the quarterly on this. 17, they're at 811. Got 290. Four, six, figure out $8. So like Baidu here, that's pretty much like a D. You know, there was really no growth. So I think I like the cash in where they're at and where they're positioned. But as far as their earnings go over the last 7 years, you can see it pretty much is where it started, which I need more dynamics for me to invest in this company. So far not looking good for Baidu. They might find their way out of this list too. So JD is next up. We'll go JD. See what we can find out with JD. Yeah, this is more like pivotal, headed to that D, like -2, -26, $1.20 to 5, and then to $1. And there you go. You got basically a $2 figured out as $2. $2, and they were 2. About like 2 cents to $2. That's gonna be a heck of a growth rate. The problem here is it's not, yeah, 1400% per year. However, didn't come with some heartbreaks there. So I don't know. I'd probably give them a D. And then, like I said, we'll just keep on researching it. This is, if you think of it like a painting, we're just painting a picture and seeing, maybe we like that volatility, maybe we don't, you know, and it comes down to predictability and where the stock is going. And for some of these companies, I do make phone calls and really get a clear picture of what we're looking at. My next investment, you know, using the Buffett rule of thumb, 10%. My next investment, it's 46 grand. So I'm not going to put 46 grand in a company that I have no faith in. I'm going to spend a lot of legwork and homework and make sure I get this right. And that's how I got to this point, is just doing this legwork. It is unbelievable. You know, 50 grand a trade, that's a lot. But you got to keep moving up. Okay, Crocs. -7. They were at -7 at one time. $1. 882. You can see how just sporadic they are. It's so different. Being a shoe company, you think there'd be like predictability in a marketplace and conquering new markets. But then again, you do have a lot of competition. You have Nike and Reebok, and I know a lot of shoe companies do replicate or try to take this niche away that Crocs has started. Very unique. 242, very successful. $3, 6, 8, flirting with 10. We can just call it 990. 990 to 7 cents. That's something you have to put up with, is that volatility. It's not a straight line, and that's, as an investor, that's what I like to see. Straight line. And I mean, yeah, it looks good now, but you can see how quickly it can go down to -7 just a few years back. So those are, you got to connect the dots. You got to figure out why did it get that way. So I give them a D, like just to have like a -7 to more negative. That's just, was it a debt cycle? Was it things? There's some explanational things that can happen, and that's fine, but we have to get to the bottom of it before I pull the trigger on that one. So go in mode, IMND. Take a look at a couple more here. And then give it a overall grade. And then we'll do this tomorrow. And like I said, we'll just keep painting this picture. Either I'll go more down the line with just these companies already did, or we'll do the same thing with the companies that we found earlier on in the week. So in mode, 14 cents, the $1.96. Go ahead and find out how they did this year. $1.50, we'll call it $2. Yeah, they were at $1 last year, no big deal. 14 cents. I like it when they just keep ramping up and there's no negative. 14.41, $1.04. They repeat at $1, which is fine. Then they doubled it. $2, $2, $2. Now they're just repeating at $2, which is fine for me. As an investor, that's totally fine. A lot better than the other two companies we looked at. So where you have negative amounts, because that, you invest like that, like now, and then it goes negative, there goes you're in the hole real quick. 189. 89, and I like this. I like where in mode is, so I'm gonna give them a solid B on that. And we'll take it all in consideration. We'll do one more here, AMN. So you got 221, 277, 299, nice ramp up. And then here you go. And then these 2 years, 244, 149, not so good. But then you go back, 687 into the 10. That is wonderful. But you had a couple years there where we went off track. You got to remember that. $3, 456. Give them a 6. Just based on averages. So going to the 6. 221 to the 6. $25%. 25%. And because you had those 2 years of slippage, I give them a C plus. Still was positive. It slipped a little bit, but if it goes under where you were 3 years ago, you got to remember that, because that's 2 years, you might not get your money back. So as investors, see, ideally, what I like to happen, I want 46 grand in, and I want, that profit out. The sooner the better. Then I can get that profit, put it in the 46, and then turn it right back around and start investing again. So maybe I can turn it 5, 6 times this year, and that's how you become wealthy quicker rather than later. So otherwise you're waiting a couple of years to get that money back, and that's money you're out and going against the other money that I need the 20% on. So that's why we're so diligent in doing this work. That's why we have to keep on it and finding out all the statistics and getting all the information before we really buckle down and make that decision. So here we go. So we got a $30 company. We want 36 out of it. It was 30 when we recommended it. It's up 2% in that little bit of time. They give a dividend, 0.39, not much, but that's fine. That's the expense of the company, so I can deal with that. 45 is the quick eval, which is great. It gives us a lot of room beyond that 20%. They're B minus, and from what I've seen, 24.5, I mean, they should definitely get an A rating. It should definitely be a front runner of what we're looking at. WNS, 64. We wanted to get 76, 63. When we recommended it, they're up 1.5%. They don't offer dividend, which is totally fine for me. $64 is the current evaluation, and we want to get to 76. So right there, it's negative. So, but it goes 40% a year, E minus. So predictability on the earnings is huge. So we just have a little leg there with the evaluation. So what is that about? You got to find that out. No problem. So I give it a B as of right now. Dollar General, 132. We need 157. It was they already went up 6% since we recommended, I think, like two or 3 days ago. The market went up. As the market goes up, the quality companies, investors like myself, note that. And they also know where Dollar General was just a short time ago. It's like double the money of the high. And we'll get into that in another episode. 210, we needed 157, so very impressive there. 20% a year. With these bigger companies, don't expect much. They're not in mode where you get 4-digit percentages per year. It's unrealistic for a big conglomerate like Dollar General to, 15% is what we're after. 20%, that's gravy. At 5%, in my opinion. This is all just my opinion. My decade and a half of doing this exact thing that I'm showing you. I've been doing it for 15 plus years. So let's. I'm gonna give it an A based on that. Okay, Baidu 114, 137, recommend at 115, went down a little bit. 74 is what the valuation is, and as we noted, this is a D, so not looking good for Baidu to stick around as an investment, especially at that price. We're going to find out that they'll probably be eliminated, and that's the whole point of doing this, to eliminate companies off our hit list and find the ones that we do want, because at the end of the day, it's just going to be one company in this list that makes it. So which one? JD 27, current price, we wanted to go to 31. It went down. 26 is what we recommended, so it went up 6% since we recommended it. Offers a dividend 2.17. Its evaluation is 9. So we will just make 18 billion, 2 billion. Let's make sure that's correct. It probably is. Well, I just double check my work. No harm in doing that. 18 billion, 2 billion, 18 billion, 2 billion. Yeah. So I did that right. Okay. $9. 14D. So that's you get a lot of percentage, but when they're in the hole, they're in the hole, and $9 evaluation, that's not good. So yeah. Give it a D. And I'm a little more impressed with them than Baidu, but we'll have to figure that out in future elimination and future evaluation videos. Crocs. So 98 currently, 124, recommend at 104, 6% down. They're valued at 133 with the quick eval and 2006 percentage per year. But the way they got there is just up and down. But overall, I'm thinking C plus. Look pretty good in my eyes. And I just, whenever I'm out and about, I always see, if you see nurses or in the Whole Foods or Walmart, they usually have Crocs on. In mode, $22. We recommend, let's see, 21. So it went up 8%. See, the smaller price stocks, they don't need much movement to get you there. I mean, 25 and we're already done, and 8% into that. They're valued at only $12 though. So we'll have to do a little more homework. Their predictability and the way they've been going up, give them a B. So overall, just don't like the eval there. So maybe like a B minus. We'll have to check in and see what that's all about. EMN, Health Services, 74. We recommend at 70. They're already 7% up. 105. So they got a good ceiling to work with. 25% a year, and the way they did it, not too volatile. So overall, maybe A minus on that one. I like how it looks. Alibaba, $75, recommended 74. So almost 2% up. They need to get to 88. The valuation 45. So that's not good. And we didn't run the earnings on Alibaba. So we'll go ahead and that. Alibaba. BABA. Okay. Alibaba. Annual, good. $17, $255, 403, $255 to 403. $255, 403. Growth rate on that, 8%. A little under than what we like. But let's see. 205.43. 8.2%. So like I said, we like 10 for 15. So, and then we just look overall and just see how they got there. $4, 5, 8. They were double, and then he lost it in half. So not good. So I give them a D, and then they're half of that too. So a D for right now. But that concludes today's video. And like I said, either tomorrow I'll go more in depth with this, figure out, target price and whatnot, or I'll just do the same homework I did with these stocks and apply it to the companies we have yet to do. More than likely, I'll do the ones that we haven't done, get to there, and then we'll compare them to where we're at now, sort them by grade, and that'll be tomorrow's video. And then, because it's holiday week, we'll just kind of we'll do FinViz, and we'll come back here, and FinViz, come back here, and then we'll just weed them all out, and hopefully by the end of next week, our goal by the end of next week is have maybe 3 to 4 companies that we're seriously interested in, and maybe possibly making a move early next year, maybe late next week, just depending if everything aligns the way we want it to. And keep in mind, patience are virtue, so I don't mind holding out for the next crash whenever that may happen. That's something that, or the next big opportunity that we're more sold into returning that 20%. Thanks for watching these videos. I think they're very educational. I don't think there's anything that offers anything like this I've seen. If it was replicatable or anything like that, I wouldn't do it. You know, there's a lot of books I read a lot. I go to Barnes and Noble, I have Kindle, and nothing goes over this in great detail. Have a great day, guys. Appreciate you being here. Thank you. Happy holidays.